Appreciate it. Hello, everyone. Good morning or good afternoon, depending on where you are. I'm glad you could join us and appreciate your time. Today, we'll be talking about why sales tax compliance matters to growing companies. Check out this quote. "We're happy staying the same size we are today," said no company ever. I mean, really, no matter how fast or slow you're growing today, it's a given that you're trying to find ways to grow faster. What we're talking about today is why sales tax compliance holds back companies trying to grow and why Avalara has become the default way of addressing the problem. Typical growing pains. Think about the major events that companies often face as they're growing, such as upgrading an ERP, growing through a merger or an acquisition, or even navigating an audit. Even businesses with mature processes can find themselves going back to the drawing board or changing as a result of these types of impactful events, investing countless hours and precious company resources. Tax is complex, and growth magnifies it. As your company grows, your compliance processes will change. You need to take into consideration where you're doing business as you start to expand, especially if you start to sell online, because it can expand your nexus. You'll need to think about what you're selling if you expand into new markets due to varying product taxability in each state. And you'll need to think about who you're selling to when you shift your go-to-market strategy to include multiple selling channels, because you'll handle sales tax differently with your resellers and distributors than with your direct-to-consumer sales. $25 billion goes uncollected each year as a result in sales tax, as a result of remote e-commerce sales, $25 billion. And states are after that money. States are expanding the definition of nexus in order to capture this uncollected revenue. One of the most common business changes we see as companies begin to grow is that they're starting to sell online, which is great because it opens a much larger pool of potential buyers, but at the same time, it will often lead to expanding nexus, requiring a company to start collecting and reporting in more states, leading to added compliance complexity for any company that's making this move. Understanding nexus. Here's all of the factors that can lead to new nexus. There's a bunch of them. For example, trade shows right here and conferences. Ask yourself, does your sales team inform your finance team of their travel plans? Well, maybe they should, because if they're attending trade shows and conferences and doing business as a result, that could actually add nexus, believe it or not. So before you even begin to try to comply with sales tax, you need to figure out which typical everyday business activities might have generated nexus for your company. As business becomes more fluid and global, many things that might have been big moves requiring a great deal of scrutiny in the past might happen under the radar as a matter of course now. That is why there's a growing trend towards companies unexpectedly triggering nexus for the obligation to file in a jurisdiction. Very often, companies of all types are caught unaware of the full list of jurisdictions in which they might have an obligation to file. Business operates in many different ways. There's no blueprint to keep you aware of which unremarkable activities may have created a not insignificant tax obligation. Pretty crazy. Check out these numbers. So what does this mean to you if you suddenly have to collect sales tax in more than one state? Well, this colorful map you see here represents the 12,000 different taxing jurisdictions across the U.S. At any point in time, 20% of those jurisdictions are in flux in terms of their borders and the rates and the rules inside the jurisdictions. Each of those jurisdictions has its own rate and rules, like I'm saying, amounting to 35,000 different rates and 30 million different taxability rules and exemptions. These rates and rules are not based on zip codes, which is the commonly held belief. Zip codes really have nothing to do with sales tax. Zip codes exist to help the mail get delivered, not really to help you find the correct sales tax rate. It gets you close, but not perfectly accurate. So if you're basing your tax rate calculations on zip codes, you may be providing the wrong rate, which can cause problems for your customers if you're over, and problems with the auditor if you're under the correct amount. Product and service taxability. I love this example about how products can be taxed differently in different ways. It just kind of doesn't make sense. I mentioned the numerous taxability rules that vary from state to state and even between jurisdictions, which means in some cases a product may be taxable here, but not right across the street, which might be in a different jurisdiction. Here's one of the wacky examples. The Milky Way on the left is not taxable, but the one on the right is. But why? Well, one very important ingredient, flour, is in the candy bar on the left, but not in the one on the right. So in some states, flour is the determining factor because it makes an item candy instead of a food item. So it's taxed as a candy rather than a food being non-taxable. Industries with varying taxability rates. Are you in any of these industries? Doesn't make sense. It's not consistent, and it's changing all the time. The tech industry, like I said, is a prime example. It's thrown into flux over what the obligations from the government look like from year to year. What is taxed versus what is not taxed is not intuitive and varies from state to state and category to category. As you can see, states tax software differently depending on if it is canned or custom software and based on the delivery method as well. There are so many other examples. For example, online software is taxed in 17 states, partially taxed in 2 states, and in 8 states, it's taxed only if the provider has a server in that state. Colorado even goes the extra mile by taxing differently depending on the particular county. Digital movies are taxed exempt in 23 states and charged at 1% in Connecticut. Digital photography and art is tax exempt in 23 states, taxable in the rest of the states. Digital games are taxed in 26 states. Software training is taxed in 10 states. Installation of hardware is taxed in 21 states. Software maintenance contracts are taxable in 24 states and partially taxed in 1 state. In some states, sales tax applies to the gross receipts from the sale of all service or maintenance contracts covering computer software. Charges for installing computer software or hardware are sometimes taxable and include services characterized as implementation, deployment, setup, or configuration. And I could go on and on and on about the crazy rules around how software is taxed. Staying on top of all these requires hours and hours of research. Staying on top of the changes is virtually impossible for one department to do it alone manually. Taxing services. Services, like software, are not once immune to sales tax, but now they're fair game. Managing exemptions. That's a whole nother ball of wax when we're talking about sales tax. In this country, you're pretty much either, when you're running a business, you're pretty much either required to collect and remit sales tax if you're selling to the end consumer, or if you're in a B2B model, business to business, you don't have to do that, but you have to prove you're exempt through sales tax exemption certificates. If you aren't charging sales tax, like I said, you'll have to provide the auditor with proof in the form of an exemption or resale certificate that was valid at the time of the transaction. Just like with sales tax remittance, states have different requirements around exemptions that you'll need to plan for. If a large part of your business is exempt sales, making sure you constantly have the most up-to-date certificates filed securely can be a full-time job. The whole world is getting more shrewd in how they collect sales tax. Having a global supply chain and market means many more points at which your goods and services may be taxed. We're not talking about sales tax if you're doing business globally. We're talking about use tax, VAT, value-added tax, and landed cost. It isn't just the new industries at risk. Even more traditional industries like manufacturing, retail, and distribution are facing new challenges. Meanwhile, customer expectations are growing, and in the high wire act of global trade, you better not slip. Taxing authorities may not want you to slip up, but with the number of considerations you need to make to stay ahead of your obligations, it may start to feel like a bit of an obstacle course. This is interesting. Here's some common red flags for auditors. It might seem like selecting a company for an audit is totally random, but the truth is the auditing process has become more scientific in recent years as auditors attempt to understand where best to devote their resources. Here's a list of common mistakes that could get you on the radar. If you're audited once and errors were found, there's a good chance that the auditors will come back. If the returns you're filing have errors or haven't been filed on time, that will definitely be an indicator for the auditor. So how do you eliminate the need to deal with any of these quirky and complex compliance factors? Well, that's where we come in. Avalara. Here's the bottom line. Do what you do best and outsource the rest. That's a famous quote by Jack Welch. As a company focused on growth, it's important that you use your resources effectively to allow you to scale. Knowing the ins and outs of sales tax legislation will not improve your bottom line, and trying to take it on anyway just adds unnecessary risk. The sales tax compliance process, if done manually, can be defined in 4 very succinct words: high risk, no reward. Think about that. High risk, no reward. Why would any company want a process that can be defined like that? So why not focus on what you do best and outsource the rest? Here's some quotes from some companies that we've worked with that pretty much tell the story as to why this solution worked for them. Here's Argus Software, which is a SaaS tool for commercial real estate firms. Ray Duong, their finance manager, said, "When we started doing more business in more states, sales tax was getting more complex and taking more time. There was always a problem." Another thing we always hear from software companies is the importance of scale. That's what Ray's talking about here. Every decision needs to be framed in terms of, is it affordable today, but can it also get me to where I need to go in 3 to 5 years? Argus is a story about a company that was evaluating their tax issues in that framework. As they grew, sales tax was getting more and more complex and taking more time for the team to manage. They knew there was no way they could determine all the rates correctly all the time. And filing in all the states where they believed they had Nexus was a huge time suck. Avalara made sense for them because it was so affordable, and also because of the pre-built connector with NetSuite. Argus told us that the filing that used to be a huge drain on the team now takes only about an hour every month. Avalara, by the way, is connected into over 600 different ERPs and accounting packages and e-commerce shopping carts. So if a company runs on it or uses it to do e-commerce or accounting, we're probably integrated into it. Here's another example. David Yurman Corporation, they make some gorgeous jewelry. They reduced risk by guaranteeing accuracy. Scott Vogel, their CFO, stated, "Because our processes are now 100% accurate, we sleep better at night knowing that we're in compliance. Avalara Avatax eliminates any potential for manual mistakes." In most every case, we've seen that companies' desire to grow outweighs their desire to keep sales tax requirements simple. In other words, tax is often an afterthought, but presents significant risks and challenges if not dealt with effectively. Here's what automating the process, automating compliance, or outsourcing the process, whichever way you want to describe it, here's what it delivers. Instead of this, you get this. These are very interesting things to consider. Instead of doing things manually by researching and updating the tax rates, you can have that automated. Instead of trying to study your Nexus obligations and taking a guess at where those obligations lie, you can get those Nexus obligations confirmed and always be in compliance. You could be spending hundreds of hours per year on this task. That could free up someone or multiple people in accounting to do something more valuable with that precious time. For example, rather than have an accountant be spending 20, 30 hours a month being compliant to the government, in other words, what that person is being employed to do is to be a de facto government agent, because it brings no revenue to your company. It's just a compliance process. When that person is doing that manually for 23, 30 hours a month, well, geez, what could that person be doing differently? Couldn't that accountant be assigned, let's say, to accounts payable, tighten that up and bring more cash in on hand? Or couldn't they be assigned to help the team make a go or no-go decision on putting a new product into a new market, and help them with a financial decision, whether that's a wise decision or not? Those are good uses of an accountant's time, not necessarily being manually compliant to the government. So I could go on and on here, but there's some really good reasons to change what you're doing now so you can get the benefits listed here. This is interesting to me. Results of automation include cutting monthly returns preparation and filing work in half. You would avoid overpayment 90% more often, and you would pass audits without penalty 50% more often. Those are pretty fascinating statistics about the bottom line benefits of automating sales tax. Automating sales tax is huge. There's an incredible rush towards this solution. It parallels what happened back in the 80s when payroll was looked at in a similar way. It's a process that brings no revenue to the company. It's a high risk, no reward process. At that time, ADP came into the marketplace with the right technology at the right time and said, why don't you automate this? Why don't you outsource payroll? And it caught on. In just 3 short years, automated outsourced sales tax will look like automated outsourced payroll does today. You'd be hard pressed to find a company that's not doing it. Consider this: our total number of customers, our customer base in 3 short years will grow by 40 times, 40x. That's incredible growth. And why? Because it's just the right time for this solution. With the advent of the cloud computing, the SaaS computing model, we can deliver the compliance, and we can deliver the taxability rates, the rules, everything up there in the cloud, keep it constantly updated, so that in your ERP or your accounting package, you can set a transaction to refer to us up in the cloud, set it and forget it, rather than have the transaction refer to a static table that corresponds zip codes to sales tax rates, which is quite often inaccurate. So it's all about setting it and forgetting it and getting rid of the risk and saving some money and putting people to work in a much more efficient manner. We have end-to-end compliance. By end-to-end, I mean we cover all the different go-to-market strategies that a company would have. If it's business to business, we could talk about our search capture product, which helps you to manage exemption certificates in the cloud. If it's business consumer, it would be AvaTax. And then if you want to have help and get the returns process outsourced, we do that with our Avalara returns service. Here's some factoids about Avalara. We have over 20,000 customers and growing like crazy. Over the past 4 years, our growth has been 410%. Here's what's interesting. 98% of our customers stick with us for 10 years or more. So we consider a customer engagement a 10-year engagement. And 98% of the time, a customer will stick with us for that long a period of time. The average amount of time saved managing taxes with AvaTax is 58%. So I hope that helped. That's why, especially for growing companies, sales tax compliance is important. And if you would like to outsource the solution, we're here to help. Here's my contact information. I'd love to hear from you. Thanks for your time today. Bye-bye.
And John, thank you so much for your presentation. I do have a poll to ask the audience. If I could just ask the audience to answer this one poll, that would be great. So are you interested in learning more? Just a simple yes or no. And John, which ERP
Mhm.
systems do you work with? Do you work with Infor, SAP, Sage?
Yes. Yeah, we connected over 600 different ERP packages and accounting packages and e-commerce tools. So that we're coming out with a new integration at the rate of 1 or 2 every week. So we've got some connectors or integrations that we've had for the past 14 years since we started. We call them our anchor connectors. That would be like NetSuite, Sage, the Microsoft Dynamics suite. And we cover from small business to large, from QuickBooks up to SAP, Oracle, and everything in between. E-commerce is really popular now. So we have Magento, Shopify Plus, BigCommerce, all the players in that, pretty much in that spectrum as well.
So when there's an e-commerce opportunity, how does that work? Do you plug right into the Magento or BigCommerce, the different e-commerce apps, and then right back to the different ERP? How would that work?
Yeah, good question. That really depends on the process in place at the company and where they're invoicing from. We can set up 2 connectors, one to the e-commerce shopping cart and the other to the ERP. And we could run a tax call at 2 different times, or we can run a tax call at the time of the shopping cart transaction, and then just run the ERP at the time, the ERP connector tax call at the time of the invoicing. So it all depends on the process. It's flexible. So we can set up both connectors or just one.
And it's all dependent on the taxing rules of that particular jurisdiction. If I'm understanding correctly, Avalara will immediately call out to its rules engine, right? And then assign the right tax based on where that customer is ordered and the rules that go along with that customer order?
Yeah, that's pretty much what it is. You have a transaction, and by transaction, I mean like an invoice that's looking for sales tax to be associated to it. So that transaction will come up, in the shopping cart or in the ERP, and then we'll take I think it's 5 or 6 points of data, and send that through our connector, and then up to the cloud where Avatax resides. It'll knock on the door to say Avatax and say, "Hey, Avatax, I have a company ABC with product DEF. Is shipping from this origin to this destination. Tell me which jurisdiction will apply, and then tell me if it's taxable. And then if it's taxable, tell me what rate applies." And it'll go through that logic in the blink of an eye. I think it's 0.4 of a second, and return from the cloud down to the ERP or the shopping cart the tax rate. And we guarantee that tax rate is correct. And we'll support a company if they set up Avalara correctly. We will support a company if they're ever audited in backing up the fact that those tax rates are correct.
So you'll actually come in an audit and support all the documentation required to release that company from any exposure they might have.
Yeah, that's where we back up our product and back up what that software can do. And that's the way we do it. I think we're the only company that does guarantee that the tax rates are accurate.
And then, how is it? What's the cost of Avalara? How do you quote an opportunity?
Okay. Good question. Because we cover, from small business to medium up to the enterprise, we need to base it on how many times Avatax gets pinged or how many times you would use our service. So pricing is based in tiers, and so we would find whatever number of transactions that you have in your Nexus states, and that we put that number into the appropriate tier, and then we would return the price for that tier. And similarly with returns, we would look at how many how many Nexus jurisdictions you have, how many returns you have to process, and price on the number of times that you would use that service. So that our average sales price across a really wide spectrum of ERPs is between 15 and 20,000. That's taken into account the QuickBooks users all the way up to the SAP and Oracle users. But that's a huge spectrum. But the average sales price is 15 to 20,000, right in there.
And obviously, anyone with an e-commerce website selling thousands and thousands of items would be interested in making sure they were covered from an automation standpoint, because it just seems so time-consuming to not have something in place like Avalara.
Yeah. E-commerce is the fastest growing segment of our business, and it just makes sense because companies are trying to grow through the e-commerce. I mean, the internet, what a wonderful thing for business, right? But we've also got this perfect storm brewing in that 31 of our state governments are still in deficit. They haven't recovered from the recession we had a few years ago. And that deficit is huge. It's like $55 billion. So 31 of our states are looking to get from the red to the black. And they see all this sales tax revenue that they could be gathering in to help them get profitable again, that they aren't collecting. There's $24 billion in uncollected sales tax revenue due to internet transactions out there. So that's a huge target. So if you're growing by e-commerce, there's an auditor probably headed towards your door. And the states are making it more and more difficult to be compliant because the rules are always changing. So what we have in terms of a perfect storm is, what I'm saying is there's a higher probability that a company will get audited now than ever before. It's no longer a situation where, hey, I've never been audited, why should I worry? It's more like, rather than if you're going to get audited, it's when. California a couple of years ago just hired 100 more auditors, so there's more feet on the street, higher probability of getting audited. At the same time, when companies have a higher probability of not doing sales tax correctly because it's getting more and more difficult to do so. Higher probability of getting audited, higher probability of not doing sales tax correctly is not a good thing for the typical company.
And hence, the whole reason why you have an accounting system in place is to automate your processes and to cover yourself and exposure, and just make sure that manual data entry is streamlined as much as possible. So that's what this seems like it does. And thank you, John, so much for your excellent presentation. We really appreciate you joining us and everybody out there in the audience. I'm going to go ahead and close out this poll. I see that 75% of you have answered. If we could get if we could get 100%, that's always awesome. So I might leave it up there for a couple more seconds. And
thanks, Adrian. It was a pleasure today.
Yeah, it's my pleasure. Okay, so I'm going to go ahead and close and flash up your contact information one more time.
Can't miss me. Shiny head.
Knowledgeable. So perfect.
All right.
All right, guys. Well, thank you so much for joining us, and we hope to see you next time. Take care. Bye-bye.
Thanks, everyone. Bye-bye.